talk about basic concept of accounting. Basic concept of accounting, grade 10. The first important thing is for you to actually know the accounting equation. The accounting equation, which states that assets is equals to capital plus liabilities. This is the foundation in which we build our double entry equation. So the most important thing is for you to know the accounting equation, right? Which says assets, right, is equals to what? Capital plus liabilities. And when we are talking about assets, there is what we call current assets and non-current assets. Current assets, these are assets that can easily be converted in cash, and that does not usually last for more than a year, right? And these include our bank accounts, our trading accounts, our stocks accounts, our debtors control accounts, and the non-current assets. Examples of non-current assets, they include equipment, land and buildings, those fixed deposit accounts, so basically that's how we divide assets. We divide assets into current assets and non-current assets. And then we want to talk about capital. Some people, they call it the owner's equity. So the capital or the owner's equity, it shows the value of assets that belongs to the owner of the business. An owner can increase his owner's equity by contributing assets to the business. Especially when someone is starting a business, you have to contribute a certain share. Maybe you saved your money, or maybe you borrowed that money, right? And then again, when the owner takes money from the business, we call those drawings, right? So again, when the business is making profits, that income, it increases the owner's equity, and the expenses, they decrease the owner's equity, right? So you have to know that the formula for capital is equals to, when we want to make capital the subject of the formula, it's assets minus liabilities. And then we will now want to talk about liabilities in our accounting equation. Liabilities, they shows amounts the businesses must pay, and they can be divided into current liabilities and non-current liabilities, right? Current liabilities, they are less than a year. The business has less than 1 year to pay these current liabilities. So when we are talking about current liabilities, you have to know that the business just got less than 1 year to pay for these liabilities. And then when we are talking about non-current liabilities, the business has more than 1 year to pay for this amount owed, like mortgage, bond account, loan account, long-term loans. And then there is what we call income. This shows the amounts the business earns, right? And then the main income statement of a service business is called the current income statement. And this one is used to record the amounts earned from services, right? And then the main income of a trading business is called the sales account. From the word sales, what we're actually saying. And this is used to record the amounts earned from inventory stock. Every business has got stock. So these sales accounts, interest accounts, you understand? So all these are very, 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 very important. And again, we talk of the expense account. So this shows the cost of running the business, like interest expense, salaries and wages, advertising, electricity bills, Wi-Fi bills, DSTV bills, all those bills, they're expenses, right? So the accounting equation, it shows the relationship between assets owned, right, owner's equity and liability. Like what I said, assets is equals to capital plus liabilities. or we can say owner's equity is equals to assets minus liability, or we can say assets minus owner's equity, we can get liabilities. Either way, but usually we usually say assets is equals to capital plus liabilities. You have to remember that all the assets that we have in the business, right, they were either purchased from the money that was invested in the business or by borrowing. You understand? So basically that's the accounting equation. And usually when we are doing the accounting, we should usually use what we call T accounts, right? The left hand side being the debt side and the right hand side being the credit side. So we have to know that the accounting equation can be used to show how transactions affect the assets, owner's equity, liabilities. And we have to also know what we call the double entry system. This is the system that is used to record financial information. The effects of a transaction, they are recorded by showing increase or decrease in the accounts of the business. This is what we call the double entry system, because transactions affect at least two accounts, right? The left hand side we say is called the debit side, and the right hand side is called the credit side. So an amount is entered on either the debit, the left hand side, or on the on the credit, right hand side, right? So we will discuss the double entry system in our next lecture. So for all your accounting problems, we invite you to subscribe to our channel, Teacher Edward, commercial staff. We help you in all your accounting stuff, right? We invite you, whether you're grade 8, 9, 10, 11, 12, we want to help you. Even if you are doing undergraduate courses, BCom accounting, all those accounts that needs commercial or accounting modules will help you. Thank you for following us.